Hi guys, welcome to this Moneycontrol live stream. You're watching IPO Watch with me, Nandita Khemka. And of course, right now we are focusing in on Indian unicorn FirstCry, which is heading to Dalal Street. The company has announced its IPO price band today, which has been set at 440 rupees to 465 rupees a share. The issue will be opening on the 6th of August and closing on the 8th of August. Now, we are joined by the management of the company to discuss the roadmap post IPO. And joining me is Supam Maheshwari, who's the MD and CEO of Brainbees Solutions, which operates the omni-channel businesses of kidswear under the brand name FirstCry. Great to have you on the show right here on Moneycontrol, Mr. Maheshwari. Give us a sense as to what led you to scale down the IPO price of in fact the as per the red herring prospective your initial offer size was 1816 crore rupees. It was brought down to 1660 crore rupees, if I'm not mistaken. What was the rationale behind reducing the size? Just give us a sense on that first.
Sure, Nandita, thanks for having me on your channel show. I think the issue size was brought down just by 200 crore rupees based on certain provisions that we have in DRHP to reduce the size, as well as we were suggested by our BRLMs based on the feedback with investors that we met. With all of those factors, we just brought down the requirement by 200 crores because that's what was not required at our end. So it's not a material amount.
Right, Mr. Maheshwari, Softbank is the largest shareholder in FirstCry with 25.5% stake, followed by M&M and Premji Investment, which holds somewhere around 11% and 10.5% or thereabouts, right? You have a 6% stake. Ratan Tata, who acquired 0.02% stake in the startup, is also selling all of his shares. How will the shareholding pattern really change post the IPO? Give us a sense of that.
So look, if you look at our cap table, you will see SoftBank, which is at 25%. They will be post the listing, they'll be somewhere around 20%. SoftBank is selling close to around 16% of their shareholding. Mahindra's is less than 10% of their shareholdings is what they are selling. They'll remain significant shareholders for FirstCry for at the time of listing, and very few shareholders like Mr. Ratan Tata is just a very small sort of a shareholding he has, and many of the shareholders are not also selling at all. So there are quite a few shareholders that are not selling even a single share in the OFS. So that's how it is. Yeah.
Right, and you will be using the funds to set up new modern stores and establish a warehouse in India. Domestically, which areas are you targeting for expansion?
So look, we are already present in 508 cities with a store count of almost close to 1,050 plus stores already. In next 3 years, we will be putting out some 350 stores for which that we have shared in our in our RHP. That we will be using some of the use of proceeds from that 1,666 crores towards the expansion of these 350 COCO stores across different cities. We are already present in 508 cities, but we'll be expanding that as well as we grow our footprint of our stores.
Right, you have presence in select overseas markets as well, UAE as well as Saudi, right? Where will you be looking to expand your footprint? Would you be looking at foraying into newer geographies as well?
No, so I would like to draw your attention and to your viewers' attention. We operate India in India multi-channel, which is core of our business, Nandita. We are total addressable market in the India childcare alone is around close to $34 billion, which will become $68 billion by FY29. And 16% of the market is only organized, rest 84% of the market is unorganized. 16% market which is organized is growing at a 20% CAGR. So we believe that we have a very large opportunity, although we are the largest shopping destination for mothers, baby and kids in the country, where our online is a 75% of our GMV in India multi-channel, and 1,000 stores plus deliver us 24-25% of our GMV. but we are still very insignificant, very small, though we are the largest. So we'll continue to focus on India and international, which is a UAE and KSA business, which is roughly around $11 billion of TAM in UAE and Saudi Arabia put together. Again, we are the number one online specialist mothers, baby, and kids platform in both of these geographies, in UAE and KSA, which we have accomplished in a very short period of time. Because of all the capabilities and strengths that we have built, we're able to replicate our playbook of India towards both in UAE first and then in Saudi Arabia, which we started in August 22. So we believe that we will continue to focus on India multi-channel, which is the core of our business, which is very large time, then in UAE and KSA, and then Global Bees, which is a third large segment, which we started, incubated a company called Global Bees in 3 years back. And last year alone, it delivered 1,209 crore rupees of net revenues in FY24 and turned profitable as well on an adjusted EBITDA basis, compared to FY23 when it was a -5% and grew 35% year on year. So all our businesses, three main segments, have grown meaningfully, improved its financial profile as well. From a profitability, adjusted EBITDA profitability standpoint, India multi-channel has grown to 8.8% adjusted EBITDA in FY24 compared to 6.2 in FY23. So we'll remain focused on, in these three key verticals that we have, or three business segments: India multi-channel, international, and Global Bees. And a small one, the fourth one is as preschools and others, which is we grew 50% year on year and has a 18% EBITDA for FY24. So this all four segments comprise of $120 billion of TAM. So we'll remain focused on these rather than going to new geography.
I reckon your losses have come down in FY24, right? Any roadmap or timeline as to when you guys will turn profitable?
So, Nandita, you have to look at our profile more from an adjusted EBITDA basis, because there are certain costs, which flows between adjusted EBITDA and PBT or PAT. But if you look at our adjusted EBITDA profile, in all these four segments, we are in the core business segment, which is the largest business segment, which is India multi-channel retail, which grew from 5.9% adjusted EBITDA in FY22 to 6.2 in 23, and now 8.8 in FY24. So it has consistently grown, and we have been profitable for almost 4 years in a row on an adjusted EBITDA basis. Global Bees, as I said, was -5% for FY23, and it has become positive at FY24 while growing at 35% year on year. So, and an international business is a relatively new business. In FY24, we had FY23 we started KSA, Saudi Arabia business, so it will take some time to become operationally break even. An education business, which is segmented as others, is already 18% EBITDA profitable. So with that, I would say we are at an adjusted EBITDA basis, we are at a console level, we are at a 4.2% profitable, which is very meaningful, and will continue to hopefully demonstrate our past growth as we go along in the future, while growing on a top line as well, because the market TAM is, as we said, is very large, $120 billion.
A couple of more questions. In terms of your expenses, they have seen a bump up by 10% or thereabouts compared to the last fiscal. What contributed to that, and how do you plan to control your expenses going forward?
So, Nandita, if you look at expense as an absolute will grow, but as a percentage to the total revenue, it has come down, and that's the reason at a console basis, our adjusted EBITDA has increased from 1.5% to 4.2% from FY23-24. If you look at our core India multi-channel, which is the largest business segment for us, and has been there operational from 13 to 14 years since from our inception, their adjusted EBITDA has increased from 6.2 to 8.8 in FY24. So while our expenses may have gone up by 10%, but at a aggregate basis, at a percentage basis, they have only improved.
Your GMV, of course, has almost doubled since FY22. What is the trajectory going forward? Are you expecting to maintain this run rate?
So look, all I would say is that we have three business segments, and the fourth one is our education and others, which is just a little smaller. All will continue to grow decently. How we have done, we have demonstrated good performance in the past. We operate out of a $120 billion TAM. India itself is, going to be $68 billion TAM in, India childcare by FY29. We make 25, 26 million babies in India every year, and only 16% of the market is organized, which is growing at a 20% CAGR. So, I think market is very large in India, as well as both in UAE and KSA, which is $11 billion, and the D2C market for is almost close to $34 billion by FY29. So all our segments, business segments, because of the market size and what we have built as a moat as far as our business is concerned, bringing joy to young parents in their journey of parenting, is what we will continue to deliver, and therefore be able to not only grow and but also deliver shareholder value over a period of time.
Right, where is the bulk of demand coming from, and how do you see demand shaping up going forward, especially from tier 2 and tier 3 towns and cities?
So Nandita, if you look at our RHP as well, we have stores in already 500 plus cities. The 1,000 plus stores that we have, 1,050 stores we have, are across 500 plus cities, some 508 cities or so. We will be building more stores, as we have shared in our RHP, around 350 stores. So we are already there in beyond tier 1 state capitals and so on and so forth. So we'll continue to sort of grow. India, as I said, is always, I believe, is a very, I would say, segmented country in terms of a diversity of socio-economic, segmentation, and that's an opportunity for any management, for any company, and for us, and therefore we will be able to continue to build more, growth across different segments of the segmentation, because online enables us to cater to that, and even our presence in 508 cities through 1,000 stores will continue to compound as we grow further. So growth should definitely be there, because the large TAM with segmentation already there as a macro, and our capabilities are being already mapped, being an a multi-channel player, both online, offline, in terms of EBO and MBO, which is exclusive brand outlet and multi-brand outlet, and third, which is a distribution of our home brands into grocery and pharmacy stores. So with all that, we should be able to demonstrate our past performance of building growth to on times to come.
Right. Last question, really, Mr. Maheshwari. You're seeking a valuation of somewhere around almost $3 billion or thereabouts. As per current return ratios, do you think this is justified? How would you really justify it?
Look, in this process of public listing, our board had appointed certain banking partners called BRLMs, and with their help, we met with couple of 100 plus investors, both domestic and foreign, in India and abroad. And with that, the banks have collated that feedback on the pricing and expectation of those investors from both domestic and foreign institutional public market investors, and that they came up with a price band which was recommended to the board of directors, and the board of directors had approved it with that. So that's how we have set up the price band as a process with the help of bankers and our final approval from our board.
All right, fair enough, Mr. Maheshwari. With that, would like to thank you for taking out time and joining in, and wishing you all the best, with your listing. Look forward to touching base with you post the listing of your shares as well.
Thank you, Nandita. Thank you very much for having me on your show. Thank you very much. Thank you.
Thanks a lot. Well, of course, with that, we've come to the end of this edition of IPO Watch. Thanks a lot for tuning in, but you guys stay tuned to Money Control, for all your other news and updates. Of course, 3:30 p.m. is when we'll be back with closing bell with how the markets shut shop for the day. Stay tuned. ये क्या था? प्लीज ऐसे मत करो यार.